Welcome back to Market Day Report. I'm Tommy Grisafi. Scott will be back tomorrow. Well, it's July 1st and the markets are moving. The grains traded overnight. Let's get into the quotes. Let's look at corn first. Looking at the corn market, now July's coming that first notice period, so you're not going to see us quote that as much anymore. Let's move right to September. September corn, 402.5, down 5. December corn, 416.5, down 4 1/4. You see this corn market trading down. There's a lot of historicals. I'm sure our next guest knows them. I think I actually heard him talking about them last week. But whichever way the report goes, we tend to go that way during the week. Let's move over to soybeans. Let's quote them up. September, 1097.5, down 2.5 on the overnight. November, big volume starting to trade in November soybeans, 1101, down 3. Interesting trade in beans. Keep an eye on the options market as people will be squaring up positions here before the 4th of July holiday. Let's move it over to Board of Trade wheat, where I'm from. SEP Board of Trade wheat, 571.75, down 1 3/4. East Board of Trade wheat, 595, down 2. Wheat markets have been extremely volatile the last 2 months. Hard red wheat, 582.75, down 3.5. December wheat, 599.75, down 3.5. Can we hold that $6 level? I bet you our next guest will be able to tell us. Only easy questions for him this morning. SEP spring wheat, 613.25, up 1/4. That was up pretty firm overnight, giving up those gains. D spring wheat, 632.25. Last but not least, we have to talk cotton. Cotton, 72.42, up 44. East cotton, 73.26, up 57. Well, let's bring him in the show. Brian Hoops, Midwest Market Solution. How are you?
Good, Tommy. Good to talk with you. How have you been?
Not bad. I had to get up early today. I always wonder how you get up this early, and I had to. Suzanne was here putting makeup on me. I don't know how you do it. Give us the good news, as the overnight markets were quite a bit lower here as we finish up.
Yeah, unfortunately they are. And as you alluded to earlier, we have a history. Whatever direction we trade on the report day, 14 out of the last 15 years, we trade that same direction following the report. And so that means lower prices for the grain markets. And we've on that pace right now with the lower overnight markets. So you look at the big picture after you get past these reports, there's not a lot of bullish news to push these markets higher right now. There is some crop damage. We drove to Sioux Falls, South Dakota this weekend, saw a lot of really good crops all the way through Missouri up to about Sioux City. There is some flooding by Omaha, and that's taken some of those crops out. But on the back roads where we were diverted, their crops look pretty amazing out in that area all the way up to about Sioux City. And then it gets really wet along the interstate into South Dakota, and it's a much different crop. But you have a lot of crop already pollinated for this time of year. You have a lot of wheat being harvested. We're at a much faster pace in that hard red wheat harvest. We're virtually done. And behind it, we planted double crop soybeans, and those soybeans are already up because we've had moisture. So this, you look at all the news that we have, and none of it's very friendly. Even Brazil's second corn harvest is about 30% done as of this weekend. That's double the normal pace. And what that means is that safrinha corn crop hits that export market sooner rather than later. And that's going to slow any U.S. corn exports. So if you were banking on having good exports into the summer for corn that's going to rally prices, I'm afraid we're going to see that safrinha corn crop hitting the market soon. And that's going to slow our corn exports down. So now what are you looking at? There's not much that's going to give us a rally here. Maybe wheat has a base of support on the daily charts. We can get a little short covering bounce there, but really the fundamentals don't support that. It supports rallies to be sold, Brian, in these grains.
I asked you for the good news. You gave us the news. As I always say on my live stream, let's go over the facts, not feelings, and you did a great job of that. Well, we're going to take a little break, little pay for some bills, as Scott likes to say. We'll be back with Market Day Report in just a minute. Welcome back to Market Day Report. I'm Tommy Grisafi. Well, we've talked grains. We're going to move over to livestock. Let's look at live cattle. Now, the prices on the board are as of Friday's quote. August, as Friday's close, August 185.42, down $1. Ock 184.87, down 87. Deese live cattle 185.90, down 110. If you talk cattle, you got to talk feeders. And as they like to say on the trading floor, feeders are the leaders. August feeder cattle, 259.30, down 135. Set feeders, 259.65, down 175. Ock, 260, down 180. See how hogs closed up Friday and see what Brian can tell us about the meat complex real quick here before we open. We'll switch right to the August hogs, 89.50 up 140. Then I'll quote you the Deese hogs, 69.85, 82.50. Back to Brian. We have a minute and a half. Brian, talk meats. What are you seeing there on the meat open when you look at the order book?
Yeah, I wouldn't be surprised to see a little follow-through selling, a little lower opening in the cattle market this morning. I thought, it was disappointment as far as the cash trade goes last week. We were expecting stronger cash trade, and really it was no better than steady in the Southern Plains and on a dress basis. Now, the cutouts continue to move higher, and they should this week because we have that holiday-shortened kill week this week. That'll help packer margins stay in the black here. They're about $18 positive. Cutouts should be fairly strong because of the slow kill week. Maybe we can get stronger cash trade this week, but as you go past this 4th of July holiday and start looking into July and August, those are usually not great demand months for beef. And so we may see maybe a slowdown here in consumption and maybe packer demand as well.
Are you hinting to us that we're halfway through grilling season, my friend?
I'm grilling 12 months out of the year down here, so I'm on it all the time. But for the most part, yes, we are at least halfway through that grilling season, and you're looking at Labor Day demand several weeks away before we can start really talking about that again. So I think your demand may start to falter here a little bit as we go past 4th of July holiday. And of course, at these higher price levels, producers have more risk that they really need to manage at this time frame.
Yeah, and I think the livestock guy or gal has to be looking over at what happened in grains and saying, I better not mess around. Now, they do get to buy meal and corn a little more. It's on sale, as one would say. What do you think if they need to get some grain bought, the livestock producer?
Well, I think at this point, you're kind of looking more hand to mouth than being real aggressive. If you want to buy some and lock it in, I think you have to use options at this point to give yourself some flexibility that we have not seen the harvest lows yet. And we're going to continue to work lower, probably at least into September, October timeframe. Then you can lock in maybe a wide basis and lock in all those cash needs.
Brian, I like it. Brian, coming to us from Springfield, Missouri. I'm going to hand it back to Suzanne, and I'll catch you in a few days, my friend. Suzanne?
Good stuff. Thank you, Grisafi. Well done. I mean, this was your first time doing the markets. Of course, we're used to seeing you sit here in this chair doing the Cow Guy close, but clearly...
Long-time listener, first-time caller.
It's,
Welcome to the show.
What's going to happen soon is he's going to be anchoring from this chair, and then we're going to put you on weather. We're going to kind of make you run the circuit here.
That's just what America needs. Back to you, my friend.
Well, more Grisafi. I like it. Thank you so much.
Thank
Great
you.
job. It's so good to have you here, as always.